So thank you so much for being part of this conversation and uh, embracing financial crime analytics for effective compliance is what the theme of this particular session is, and I will try to learn from the panelists here in terms of how are they reacting to this. We understood the fraud part and how AI and ML can prevent the frauds in the previous session. But I must say digital arrest has become the trending topic. Sometimes I can share with you honestly, if there are no major stories, I say, is there anything on digital arrest? Maybe we can do that story. SEO will pick it up because the fraud has become a theme for the business and the finance news as well. So let me begin by asking you, Ashwini ji, thank you for part of this conversation. And the RBI recently came with a master directions, right, specifically on the emphasis of market intelligence. So my question is based on that. Digital payments frauds are very high. Value of impact is also very high. So the master direction by RBI, there is an emphasis on setting up market intelligence, right? Market intelligence unit for monitoring credit exposures. How are banks putting control measures for prevention and early direction of corporate large value frauds, and views on expectations of regulations of setting up market intelligence? What are the major drivers for this particular practice? Because this has come from RBI, so every bank is actually looking at it quite aggressively.
Yeah, thanks, Amol. So if you look at the genesis of market intelligence unit, it has come from a committee recommendation, Malegaon committee. And then primary objective of this setting up of MIU is basically how to identify frauds, how to identify some sign of stress so that you can take action, preventive action if required to be taken in a timely manner. That is the whole objective of setting up of this unit. Now traditionally bank has been doing credit monitoring to identify any kind of stress. It can lead to fraud, it may not lead to fraud. There are tools available, like there is a process of review of account, there is a periodical review of accounts. There's audit, various audits and inspections are being conducted. There is stock audit where you verify stock position, you verify debtor position, creditor position. You also monitor related party transactions. There are ASM concept, which is they are primarily involved in large corporate accounts. So all these tools were always available, and banks were monitoring these accounts. How do we need to do it differently? That is something is coming from MIU. Now there has to be a consolidated approach of assessing any credit transactions so that any kind of sign of stress or fraud can be identified in a timely manner. There are various pieces of information available at different places. Their team, which we discussed earlier also, credit underwriting team is there, business development team is there, risk team is there, then fraud identification team is there. How do you integrate all the information coming from different sources and combine at one place, and then that throws some kind of input to the decision maker, which helps you in doing some kind of grading, scoring, basis different level of information coming from different sources, and integrate it, combine it, and arrive at some kind of score, and basis that score you move to the next step. Because for all accounts, you cannot make similar kind of efforts, because this requires huge amount of investment, both in terms of manpower, in terms of infrastructure. So how do you identify, how do you segregate 10 accounts where you see some sign of stress? And that can be done through integration of information, and that is what all banks are trying to do. All banks have started doing, setting up MIU in their respective banks. And primarily what they are doing, they are trying to combine all the information coming from different sources, do some, so we talk a lot about AI and ML, but when you talk about large credit transaction, what we need proper integration of information, and somebody who can read those information, interpret it properly, and take quick decision. That is what we need, especially for large credit exposure. And we have been able to identify that there is a concept of red flagging of accounts. And what is the expectation that before if that account goes into default, You're able to identify this account may go into default, and that is largely on account of some kind of fraudulent transaction. There's some kind of related party transaction happening which may not be, you may not be aware. There is some transaction between your borrower company and supplier company. How do you integrate those information in your system? So you need integration of your own system. Some information will come from outside. You need to have a collaboration with other lending institutions, other agencies, and then combine all this information for taking some action. A lot of work has been done, and there are positive results coming from all this integration, by
Sure.
integrating everything.
So, एक soft cross question है, you know, when you say that positive results have been coming, 10 साल पहले अपना system इतना robust नहीं था, हिमांशु has guessed it. क्या अभी अपना system इतना robust है कि हम future का विजय माल्या रोक सकते हैं?
That will never be possible. So I think we discussed enough that 100% prevention is not possible.
Right.
When we talk about any like, it is not like preventing account to become NPA. Right? When we do NPA prevention, what you do? There is a credit underwriting tool available. We have a
Right.
scoring model available. Here you don't have that benefit. Something will come as a surprise. How do you identify those surprises in a timely manner? That is something.
Certainly, no worries. Thank you, Ashwini, for adding that. Himanshu, you know, I was talking to somebody very recently, CCO, Chief Compliance Officer, and I says, how's your day looks like? He says, I can't tell you, I'm far more busy than the CEO because you have to do so many compliances. So thanks for taking out time for this particular session. How do you see technology and analytics transforming traditional compliance functions from regulatory reporting to continuous monitoring and automating compliance functions?
Okay, thanks
Yes.
Amol for having me here. Thanks to ETBFSI and SAS. You know, Amol was very kind by not mentioning, but I will do that. And what he did not mention is like the post-lunch session, the pre-cocktail session is equally difficult to manage because we are all of us holding up people from enjoying their drink. But having said that, yes, a drink in the evening for a compliance officer, especially after a day of innumerable questions coming from all regulators, will do a lot of good. But jokes apart, I think, you know, as a country, you know, if we look at regulations, unlike the European countries where it is principle-based regulations, whilst the US or the Western world is prescriptive regulations, we are neither prescriptive nor principle-based. We are somewhere in between. And therefore, the challenges are far more in terms of the decision-making that one needs to do. Whether may should be read as shall, whether compulsory together or mandatory together with may should be read as one is mandatory and other is optional, a question mark. So yes, decision making is difficult. But having said that, I think with the kind of information that is required, especially after the introduction of UPI, I mean, the volume of transactions have multiplied, I don't know how many times. And more importantly, you know, every small transaction is done digitally. Whether it's a 5 rupee transaction or a 10 rupee bus ticket or getting paying a shoe shine guy at the station to anybody and everybody. And that has led to manifold transactions, and the regulators themselves have moved from sampling to population-based inquiry or supervision. Yeah. So it's important that both the regulator and the regulated entity both are automated sufficiently, and it is now I wouldn't say it's a imperative, but it's a business need more than it being an imperative to have technology and automation in place. That's the first point I want to make. The second point is the world is moving away from sample-based audit comfort to population-based assurance. Yeah, and it's not only the regulators, but also the boards are demanding that, and therefore all your stakeholders demanding. Yeah. The third thing, the timing or the turnaround time for reporting to the regulators is only shrinking day by day. More importantly, while you can give the basic data that you require, what is required is the humongous amount of non-financial details, i.e. customer information, the demographic information, and the information around that is required. And a lot of my colleagues here who are financial crime experts will know it goes to the extent of demanding the IP address from which the transaction is done at a transaction level that needs to be given to the regulators. Now, when technology is being used for doing transactions, the fallout of that is obviously monitoring through use of technology at the level of detail that one would expect to both prevent and detect financial crime. And hence, if someone was to ask me, can you live in a world without technology? Can you live in a world without automation? Can you live in a world without digital transformation? The answer is pure, simple, big Times New Roman font 72, no. Having said that, it is equally imperative that as a country, as the banking system, which includes banks, NBFCs, and other institutions, the quality of data that all of us have is something that the regulators had never prescribed. Therefore, regulated entities had not sought for it from the customer, and therefore may not have it. Okay? Expectation still is that you should have got it. Okay? Now, think about that situation with the law just awaiting to be enforced. That is the privacy laws. For each time that you use a customer data point, you have to take prior customer approval to share. Now, how on planet Earth is that going to work? While it's good from a customer perspective, how are we going to operationalize it? How are we going to manage that? The 5 KRAs, the CKYC, CIBIL portal, how on earth are we going to kind of juggle all of this is anyone's guess. Yes, as all of us know, and it's no one's guess, that as much as it is a boon, it is a big problem to solve with both use and not using technology. So yes, it is an imperative in the world in which that we are living, and especially when transactions now are cross-border transactions are going to happen by using technology. We have already signed up with a few countries. China has signed up with a couple of countries. Some other countries have signed up, and the way we are doing today digital transactions on UPI, cross-border transactions on UPI, at least as a kid I had never dreamt of. Yeah, and today's children talk of, oh, that's the normal way of life. And more importantly, for Keith and his team, with changing regulations to keep pace with change of technology and the availability of technology to meet the regulatory needs and to meet not only prevention of financial crimes, but much beyond that is a continuous process and is going to be a challenge.
Absolutely, absolutely. I think you emphasized it in 72 times Roman bold font and unfolded many layers. Thank you so much, Himanshu. Let me get one more banker here. Manish, how do you see AI transforming the fight against financial crime? In the previous session, we talked about the prevention. Here, let's talk about fighting the financial crime. What hype, is it hype versus reality? How's your bank, HDFC Bank, leveraging financial crime fraud analytics to prevent fraud and detect complex fraud typologies like mule and scams?
Okay. So thank you, Amol, for having me here. I was very excited after reading the topic of the panel, but now you've taken me back to only the fraud space. But I would want to spend a minute on the topic of the panel, okay? And I love this, okay? And the reason why I'm saying this, because I think on the previous session, a lot of deliberation happened and good deliberation happened and fighting and prevention ultimately is the same, okay? So as you talked about, embrace financial crime analytics for the effective compliance. The way we see is, when we are talking of a compliance, we are talking about a compliance not of a pharma sector, we are talking about the financial sector, okay? So as a part of a compliance, the financial crime becomes a larger part that contributes to the compliance stream, okay? Then there are various other things that while that may not have a direct impact on the customer and the bank in terms of a fraud, but principally they are not correct or they are in contravention to the intent of the regulator. And I think Himanshu touched a very good point, and I like that point that we are somewhere between a prescriptive and the principle based. Now I'm coming to the question that you have asked with respect to financial crime. And I would again endorse what Ashwini talked about, and he brought in the aspect that we're talking about a financial crime, we are not talking only about the fraud. Okay? When we are talking about an MIU, when we are talking, it's a composite thing. The crime in an earlier, Indian Penal Code, now BNS, okay? A crime means that something wrong has been done with the intent to cheat. A normal, not a ChatGPT definition, mota definition, okay? Whether it's a first party or a third party, a crime is a crime, okay? And why I'm saying this, when we look at the digital payment revolution in the country, I've heard the digital arrest multiple times, okay? So that's the third party fraud, where a customer has been impacted because of the act of a unrelated person, and he has extracted the money from the customer. So that is a third party fraud. Where does it become a first party? And that's where the compliance and the fraud and the compliance are having a gray, because the money has not moved in cash. It has moved within the banking ecosystem itself. And then whether it's a digital arrest case or a digital fraud case or a corporate credit default case, okay? Somebody would have taken out the money from the credit facility which had been awarded. He would have used at a place which was not intended to be used, okay? And end use monitoring wouldn't have happened. The customer to whom the facility is given, he would be existing. But the purpose for which it is being used, and there is a default, and then we come out, and that's where we talk about the RFIs, that we talk about the multiple parameters, automation, etc., etc. So first thing, it's a financial crime is a bit larger word. It contributes to a large portion of a compliance. Now, and I think in the previous session, and in fact Keith also mentioned it, while you talk AI as an answer, I still come from an older school of thoughts. What you cannot explain, you cannot implement. Okay. So whether you call it an AI, ML, all these are the tools to provide you the intelligence for a skill. The basic philosophy stays the same. They only provide the variable, not they only provide the variables which as a normal human being, if we had to learn, probably we will not be in a position to learn that. Okay. I'll give you one simple example and a very good example. I was speaking to some of the partner. They were working on the bank statement analytics. A very simple example and a beautiful example. Bank statement analytics. Couple of items they told that when they see the bank statement, what are the things that they see to understand the behavior of a customer. I'll tell you, I started my career as a credit officer. Okay, 25 years back. My boss first day told me that Manish, look whether in the bank statement the guy is paying to Delhi Public School. If he's paying to a Delhi Public School, which means that the customer's son is going to DPS. What is electricity bill? Which means if the electricity bill is 2,000, 3,000 rupees, and per month you can see the trend, which means this guy at least has 2 ACs at his home. This will be a surrogate to understand the customer. Okay. These are the similar things. Probably it is not requiring the explainability at an individual level. These are the things which are being extracted. And the guy who was doing this analytics gave me a very beautiful example. He told that one of the example is, if a guy is paying 18 rupees UPI payment, many times in a day, couple of times in a week, and the pattern is, which means that he is a smoker. Okay, and I have implemented this particular tool in one of the insurance company where they ask for that whether you smoke or not, and this is something which is so how beautiful it is, because at the end of the day, anything, and I think Keith also talked about this, that until unless you have an explainability in place, how will you explain that what has gone wrong? Okay, and it's a very simple thing. Now, you and me, if you understand, if in somebody's bank statement 18 rupees is coming, so he is not necessarily the smoking, but at least he is into some sort of a habit.
So you need to decode what is that 18 rupees.
Absolutely. So I think if I could answer, I don't know, but this is the precise point, and these are the explainability that you will bring in with the usage of AI. And in fact, it's not AI. I think one of my colleagues, it's ML. Okay, AI will come later.
That was really meaningful. I think the people will not make at 18 rupees now. At least those who are here. Even if it's 18 rupees, they will say, "Aur 4 rupees ka kuch de dena." So, noted. Keith, let me bring you into the conversation and give some learn more perspective on the fraud monitoring systems. So how has fraud monitoring systems evolved more than traditional rule-based systems? How can anomaly detection and real-time behavioral profiling improve the accuracy of fraud detection?
I think if you look at the history as we've evolved, and again, detection and prevention are key aspects of how we've evolved too, is inherently, to write a rule, you had to either seen it before or made a wild guess that it's important, right? So there has to be significance from patterns, from past of something. And oftentimes that was based on, well, if I didn't have reporting systems in place, it was, well, I've seen it enough times, I think I should find it this next time. As you've moved more into where you wanted to go in the future and where many organizations have gone is, well, rules wasn't enough. Probably the next thing came on and goes back to the use of data, et cetera, is, well, where do I start using lists? So a list might relate back to the information we have about, well, a compromised device, information about sanctioned entities. They became another layer or lens on top of that. Then we moved back to, you know, the old mother of AI, and in a sense is the original version of machine learning models. Those, again, were typically, in its principles, is in order to learn, I had to have a history to base it on, right? And one of the challenges that many organizations had for years was, did I appropriately tag the fraud in which I can build a model to learn from to predict a future pattern? Then you go on to the next level as well. Those first principle models were built on financial transactions. Now where is it that I'm building those models off of non-financial events as well? And I think as you go through that journey as well, we think about now where some of the ways that organizations are using AI, it's also in understanding the risks that are posed. Organizations are already saying, I have all this insight from the interaction with my customers about what went wrong and how that went wrong. How do I use large language models, for example, to pull out those threats that are present there, and then inform my data analysts as to how do I codify that in the system? And that might be a rule. It might be, let's use a better set of data. It might be, let's build another model, et cetera. But there are organizations now saying is, I'm going to use AI as a threat hunting mechanism against all the corporate knowledge I have from the frauds that have occurred as well. I think if we look at another level of AI, and this is active conversations, and my colleagues back in Australia are talking to one of the big 4 banks tomorrow, is they're actually saying, how do I flip AI on the head around not preventing fraud, but from recovering the scams that have occurred? So if I'm interacting with a 75-year-old grandma who now doesn't know who to trust, how is it I use information about the fraud that has occurred on her, or the scam that's occurred on her and others, to personalize the conversation in how I present the risks that they have just been subjected to? So how I'm using those large language models to basically say, here's the way to have the conversation with the customer. Here are the pieces of information that are relevant in getting them to trust you that you're working to help them solve the problem. So those are some of the more advanced areas. Other areas that people are using AI, a lot of techniques have been used around in the investigation aspect of that. So how do I have all this information and present that to a fraud analyst is to, the summary from the large language model analyzing all those transactions is, well, you got hit by an investment scam. It happened through Facebook. It asked you for $15,000. All those aspects there. If I can give you one more example, if I can, is to going back to something I mentioned earlier on a collaboration perspective. Australia is an example again because I hear about it a lot because I live there. You have telecommunications companies now using artificial intelligence to identify which calls, which interactions on their networks they believe are scam calls, investment scam calls. Then they take that, the next layer is, okay, we've identified using AI that at this call duration, this is grooming for an investment scheme. So now they've taken that data and now send a scam indicator to the banks to say, you might have this customer who has this phone number. If you now have them transacting on their account and making a payment, let's say, for example, over $10,000, the chance that that is an investment scheme is through the roof.
Okay. Noted your points, Kit. I think the time is slightly limited. I will just take maybe 3 to 4 minutes and maybe 1 minute each if you could quickly just share question. I mean, brief on this. So Ashwini, start with you. I mean, this question is again about RBI. Ashwini will blame me for asking all the RBI questions to him. Specifically about the assets and liability. So with RBI expecting, enterprise-wise fraud monitoring, how do you see banks bringing in together the assets and liability side of banks being monitored together?
Yeah. So traditionally, bank has been using various channels for doing transactions. So there are core banking solutions. There is digital payment gateway. There is a transaction monitoring systems in place. So there are information coming from different channels. Again, this whole talk from RBI on asset side, liability side, and then no other transaction side. How do you get based of all this information and then arrive at some meaningful information? So that is what the whole concept of EFRMS, what RBI is talking about at enterprise level. So you have a lot of information within the system. There are some transactions happening in on liability side, which asset team is not aware of. Had they been aware of those transactions, they would identify that something is going to be wrong. So how those information talk, they talk to each other. That is what we are trying, entire banking industry is trying. And it is not limited to your own system. It is also information coming from other systems, like telecom operator is there, financial crime unit is there, which I4C is trying to do also. If you talk about I4C, a lot of information is getting integrated, and then that is coming to the bank also. And then what we are trying to understand? We are trying to understand behavior of one individual. And that behavior can be seen from any sources. And then if one source throws some behavior, how do you take that behavior into account while monitoring other part of the transaction of the same customer? So that is what is a need, but then this requires huge amount of effort. It requires huge amount of investment from human resource side, from infrastructure side, and you need to make right balance. Do you want to prevent everything, or you are okay with 5% kind of tolerance level and then make some adjustment, because you also need to meet customer service criteria. You also need to have like transaction operational efficiency you need to ensure. So how much is the tolerance level, and how you reduce false positive? All these things should be taken into consideration when you're trying to build a system.
Sure, Ashwini. Himanshu, you spoke about rule-based some time back. Rule-based and principle has always been a challenge. So when it comes to AML, how are banks currently leveraging advanced analytics specifically beyond in AML beyond rule-based regulations?
Okay, it's like two sides of the same coin. The brakes in a Ferrari car don't control the car, but help the car be driven faster. Yeah, so two sides of the same coin. There are a number of use cases where AI can be used beyond the rules. I mean, one is couple of them come to my mind. The first one being, behavioral and predictive modeling of how the customer is going to behave. We spoke about 18 rupees, smoker. Every day, if you see that between 10 and 11, he's spending X amount of money, 18 rupees, he's going for a smoke, or probably is leaving home and that's going to be his first smoke. Yeah, that kind of predictive modeling. The second piece is, using the NLPs to scan the news that come through to see, are any of your customers getting impacted? Are there any negative news about anybody who you are dealing with, whether a prospective customer or a customer which can be used as a red flag to see how transactions, or like Keith mentioned, money going out, telephone number, $10,000 going out, something of that kind. If that's going out, pick it up. And now, when you do electronic transaction, you see the name of the account holder. So that's another use case. A third use case can be, mapping of risks. Typically a high, medium, low customer mapped, probably reviewed once every 6 months, basis the regulatory requirement. On a continuous basis, patterns that you see, patterns of transaction. You can monitor the profile of the customer, and the system can just kind of update it behind the rules. And there are many such use cases. But the most important thing that I want to share is, like, we all speak about having technology, which means investment in technology. We all speak about investment in the quality of data that we have, etc., etc. I think in my mind, and again, I may be called as a person of old school of thought, but to get the ML and the AI running, you need to invest in people upgrading their skill sets, because these are the people who are going to build the models for you. And if the upskilling, training, or having multiple skill sets kind of teams are not there, none of this will work. And hence, while we look at all of this, please also look at the human side of it. Invest in human besides technology and every other aspect of building the technology.
Oh, that's absolutely true, Himanshu, and it's not a old school, but that's a fundamental, an integral part of every organization. Noted that. Manish, false positive has been one of the risk, right? And the question is how to adopt analytics to come over that. My question based on this is how can banks strike the right balance? We always say that there has to be a right balance. So how to maintain the right balance between customer friction and robust fraud detection?
So I will try to restrict that since the timeline you have given 1 minute. I think Keith talked about that what the other geographies the governments have done. Okay, I would want to draw everybody's attention towards the DPSC circular, which is released by RBI. Okay, a beautiful circular. Beautiful circular based on the beautiful principle. Okay, triple S. And they definitely spell out that what needs to be done, what need not to be done. In many places they are prescriptive. So the point is very simple. It will definitely, a customer experience is a paramount. Okay, whether it's a smaller institution, NBFC or a large bank. Nobody can survive with compromise on the customer experience. At the same time, each institution will have their own tolerance level. Okay, and that will come out in the number of or the kind of strategies that you adopt. The problem is not the friction. And this is something that when I look at the complaint or the escalation, the problem is not the friction. The problem is the response to the friction. 99% of the time, the first response, wherever the escalation has come, we observe that the remediation to the escalation was not appropriate, and that is the reason it escalated. The customer is perfectly happy if at certain stage he is called for a friction. But do we have an absolute clarity on the kind of response has to be provided with the remediation? And that is where a tech comes into place, and as Himanshu talked about, the human intelligence comes into place. You can console a customer if a customer is unhappy when he has reached out to you. There is absolutely no issue if you tell him that, listen, we will take 48 hours to respond. If you say him that, sir, 5 minutes mein batata hu, आधे घंटे में batata hu, okay, then it's gone. The customer is irate. So that's where I would want to leave it.
Sure. Keith, lastly, I think we discovered different layers, in fact, of AI, ML, preventing frauds, dealing with frauds and everything. My question is about governance, and that's the last part. What kind of governance frameworks need to be in place to monitor performance drift in real-time AI and ML models?
I think one of the core things, and I'll make it quick here, is you need to have the performance reporting in place that tracks the individual performance of individual rules, individual detection logic. Frankly, if you have the right tools, the right model risk management tools, model management tools, it will help you identify the performance of the logic itself, but the performance of the data in the logic as well. And I think identifying at what point you feel that the threshold of the model or the logic is not performing, and then build in a rigorous process of how is it that then you redefine how you detect that fraud. So I think it's the reporting aspect that helps you track what's the results of that is quite important.
Sure, noted. I think the time is up. And my questions I still have there, but I think the time is up and we have to take a pause. Maybe we can discuss it, over the cocktail or the dinner. But thank you so much for sharing those meaningful insights and, relevant case studies. I think the 18 rupees is a catch here. So everyone will keep that in mind. Thank you so much for being part of this conversation. And again, thank you so much for being part of this conversation and listening to us very, very patiently. Thank you.